Hey guys, welcome to the trading battle. This is Boris Noswork from BK Forex, and I am back in New York City, which means we're going to be playing Name That Ambulance, Name That Fire Truck, Name That Police Siren, as everything background of me is going to be making lots of noise. But I have a very, very, very special show for you guys today. It's the CPI special. We had a massive surprise on CPI. Markets are bleeding red as we open up. And I have two trading battle veterans with me, Chris Guzman and Scott Welsh. Both of them are old-time pros at volatility and market trading. So hi, guys. Hi, Chris.
Hey, Boris.
How you doing? Scott, how are you? Let's test your voice. Say hello to me.
Good to see you. Good morning. How are you?
Good morning. Okay, so Scott, you're coming to us from where? From Naples, Florida?
Naples, Florida. You better believe it.
Naples, Florida, the gem on the West Coast, the Gulf Coast gem. Where all the bougie people live. You can tell he's a successful trader because he lives in Naples, Florida. And Chris, are you still in London? Are you still the Jersey boy from London, or where are you now?
It's funny, Boris. I was just telling Scott in the lead up to the battle how every one of my American friends and family asked me how London is. I'm actually 4.5 hours north of London.
Yeah.
So I couldn't tell you how London is, but 4.5 hours north, it's really nice up here.
4.5 hours north is like in the middle of nowhere. Where are you? Is it
I'm practically in Scotland, right?
Yeah, you're practically in Scotland, my friend. That's right. Yeah. Be careful. You might secede very soon.
Yeah. Yeah. No, I'm based up in between Liverpool and Manchester, up in the northwest of the country.
Oh, okay. Well, my condolences to you. No, I'm just kidding. It's a wonderful area. I'm sure they're wonderful people. I watch all these British comedians make fun of everybody from Liverpool and Manchester all the time. But of course, it's because they're London snobs, Anyways, it's good to have you guys. Super exciting day as we start today. CPI. Look at this. We totally surprised the market with much hotter numbers all across the board. Let's just start with that action, and just Chris, you tell me what you think. I'd like to know your read on what's going on and whether you think this is a peak value or this is a sort of a nightmare of things to come for us as far as higher prices.
I mean, a nightmare depending on your perception, really. It depends on your perspective.
Sorry. Go ahead. I'm sorry. I'll be right back.
That's okay.
That's funny.
Okay, gives me a chance to clean up my chart a little bit here.
Is that on the street or was that in his house?
Sorry guys, that was the Pomeranian going nuts. So I had to calm him down. Okay, let's talk about CPI. You were saying to me that nightmare from depending on what point of view you have, but like what are we looking here? Looking at the dollar index.
Yeah, so I've got the dollar index up in front of me, and if we just go up to the daily time frame, I mean the dollar has been a bit of a runaway train for quite some time now, right? I mean, we had this long-term consolidation range, and if you recall, Boris, when I first started coming on to the trading battle, we were somewhere kind of down here, and I said I'm bullish on the dollar all the way up to 99 and beyond, and I cited this consolidation range. But since the consolidation range has kind of gone right out the window because resistance is a thing of the past. I mean, this thing just keeps going and going and going. And of course, what I always say is this is directly related to what we're seeing on the stock market. So if I just pull up the Dow, I've been anticipating a sell-off on the Dow for some time. You can see from a technical perspective, we do have an up capital Fibonacci boundary here, but based on my approach to the market, I call this a super shallow one-toe retracement. Basically, what it means is that we've only come back to this 23.6%, and the market likes to come back a little bit deeper than that. So even if it leaves the Fibonacci boundary, it has a tendency to come back to try to get at least that 38.2%. So as far as the Dow is concerned, I mean, I'm very bearish on this all the way back
What does that take us on a 38 retrace?
about
25?
25,000.
Okay.
25, yeah.
Okay. Can I ask you a question? I remember you telling us beforehand, but can you refresh our memory? The red arrows, blue arrows, what are they? What are those things on the chart?
So that's just the fractal indicator. So all that's doing is pointing out my official highs and official lows for me.
That you mean that's official highs, official lows against what relative measure? Like what is that?
So basically, the way we're defining an official high and low is just a center wick that has 2 candles to the left and 2 candles to the right that are either higher or lower, right?
I see. So it's the highest high or the lowest low within 2 candles either side of the trade. Why such a range structure? Like why a 5 candle range structure?
That's just the way I've always traded. Based on I love a break of those highs and lows.
Okay.
Because since the market moves in waves, the idea behind it is every time we touch one of these highs or lows, the thinking is that we should see a pullback and then a continued sell off, right? In this case, a sell off, right? And I mean, you can see it play out again and again and again. I mean, there's one example right there. There's another example right there. There's a third. There's a fourth. So I'm looking for the 5th example of this right in here.
How many examples does it go before it exhausts itself usually?
I mean, it depends. It depends. So what we're looking at right here, in terms of this down move, these are my sub fibs. So I have my capital Fibonacci's are pointing bullish. So I suppose that's the good news for long term, right? But the subs are down and going off of this all-time high. You have sort of 1, 2. We're only in the second wave of this. So I actually anticipate a move down to 25 over the coming months before we start to see any sort of meaningful rally again, return to the Dow.
Okay. Cool.
And you can see the same thing across the board. I mean, if I show you S&P real quick, it looks very, very similar to the Dow. There we go. Looks very similar to the Dow. You can see it came up, approached the trend line, gave me an evening star, fell. It's tested the evening star, but as we speak currently, it looks as though that evening star is going to hold, and you can see my outline there of what I'm expecting.
Interesting. If it breaks the high of the evening star, does that invalidate your analysis?
It does, absolutely. Yeah. So if it comes up, so when I say breaks the high, I would like ideally for it to break and close above the high. So just simply touching the high.
Yeah. Not just touch the high, but break the high.
You got it.
Agree. Classic, classic technical analysis. Okay, Scott, how about you? What do you reckon on these numbers? What do you see technically? Can you share your charts with us? Chris has got very pretty little annotated charts. He's clearly got problems with OCD at this point, but but we appreciate his perfectionism. What about you, Scott?
Well, a couple things fascinate me right off the top. And that, first of all, is a lot of people really still haven't gone through a bear market. I think that's been a kind of a macro theme the entire year. I love going back. I'm a sucker for trading videos and trading books. I mean, I still like to listen to what people have to say. But it's interesting if you start looking up specific topics on bullish strategies and so forth, or option strategies. You see all these videos of all these YouTube creators, and you look at the date and they all stop a year ago or 2 years ago or 18 months ago. And you don't see any more videos from these people. And it's like, part of me is like,
that's funny.
I feel a little pessimistic and snarky at one, and then I kind of feel sad because, holy smokes, they started a strategy and thought they were making a YouTube channel, and all of a sudden things obviously have gone badly because it's video, and then nothing for a year. So I'm fascinated by that we had millions and millions of traders, a bunch of new people to the game in 2020 and 2021, and all of a sudden now it's like, what's going on? So I'm fascinated by that and this whole bear market. It feels like when I watch these, again, in a macro picture, it feels like the bulls are just begging, like, it's over now, right? It's over now, right? Okay, now it's over. Now we can go back to, making YouTube videos and so forth. And, I think Chris feels the same.
I think that's more like the crypto people. I think that the crypto people are the real
the
beggars.
crypto crowd is definitely silent.
You know, I think the,
well, yeah,
the stock
times 10
crowd is kind of much more diverse. You know,
right.
but yeah, I do. You know, I do hear you that yes, you know, bear markets. I think what somebody said. I was listening to a podcast. Somebody who's a big vol trader said that what nobody is really ready for is the second leg, and that's exactly what Chris was talking about. Because the true bear markets have a second leg. The second leg is the one that destroys everybody because you know the first leg you kind of have the recovery, everybody feels good, and then you just destroy. And then once that capital is destroyed, it takes a long time to rebuild it. It takes about 7 years, I believe, to rebuild it. And that very well could be the trade. You know, we'll have to see. You know, you're right.
And that coincides exactly. I agree with the second leg because it's the first one's like, okay, I can handle a bear market. You know, I'm in it for the long term. Look at the chart since 1926, and then the second leg hits, and it's like, I give. But my favorite stat, the famous truism, is if you're looking at market history, is going back to the Great Crash, Great Depression, 1930. In the middle of the worst crash, I mean, you look at that chart, it's brutal. It's worse than 2008, whatever. But in the middle of that worst crash, there were 4 straight bullish months in the middle of that. 4 straight, not weeks, not days. So it's crazy that even then, you know, the 20s came with all 90% margin and people were going crazy. Every household traded stocks. In the middle of the worst crash, there's still 4 straight months up. So there's always going to be, it's hard to believe when you look at the macro and it's like, it's got to be bearish, but bullishness can still survive a little bit. I think that's what we saw on Friday. I think that's what we saw yesterday. And I think it's what we saw pre-market today until about 8:30 a.m. Eastern. Yeah. And now I think we're in for just a very bad surprise. I am switching over to my charts. Can you see my charts or?
Not yet,
okay.
But let's see now. They're coming up. Okay. So
are they?
Yep. Now we see your charts.
I really love weekly charts when I'm dealing with stocks. I like different charts for Forex and other things. But weekly charts kind of keep you calm. And see, this is when people are making YouTube videos. Yes. Everything is wonderful. This is not as wonderful. And you can see these moving averages that they're all looking like they're hanging out together in a very small room. And if we make that bigger, oh, look, it's over, right? Three straight weeks. It's over. And now it looks like we break below these lows. I mean, we could hit these lows. That's that second leg, Boris, you talked about, or maybe even farther. So I'm not particularly bullish. This didn't really fool me. Again, I'll trade the charts. I don't put my opinion in my trading, but this feels fake to me. It really does. It feels like we're in trouble.
What feels fake to you? The up move? The
bullishness. Yeah. The bullishness of the past 72 hours did not feel legitimate to me. It made me very skeptical, so to speak.
I think, listen, I think people overread too much stuff into price. Price action is just literally what people are thinking in the last 24 hours. That's
really everything, Boris. That's everything.
What?
That's everything. That's
no, but what I mean is
what
I mean is there's no mystery to it. It's not like a lot of people always say, oh, look, they manipulated the market up because they knew the data was going to be horrible, and now they flushed the market down, and everybody was a sucker for it. No, convention, all common wisdom indicators actually pointed to a significant decline in used car sales. Housing was down, gasoline was down. What people just didn't appreciate was, I guess, the absolute. Oh, hang on a second. Sorry, I'm killing all my indicators here. What people didn't appreciate was the fact that there is a massive lag in pricing for all of the basic foodstuffs, right? I mean, it's just like all of the foodstuffs had just really blown up right now as an indicator. And I think to me, the more interesting question, I mean, if you're sort of fundamentally oriented, is given the fact that energy has stabilized, given the fact that wages have kind of stabilized, and that the fact that even Ukraine is able to export wheat. Basically, when you look at the whole commodity futures complex, forget the consumer price index complex. If you look at the commodity futures complex, if you're using that as a forward indicator of inflationary pressures, I think there's a lot to be said that we may be peaking. and that this is actually, the bear's last hurrah in some ways. So we have to, we'll have to see. But it's pretty unsustainable to have these kind of, inflationary pressures for quite a long time. It's also, of course, everything is very geopolitically oriented right now, right? It's all really depends on just how badly Russia can squeeze Europe, just how badly Ukraine can squeeze Russia. And those are factors. I think the thing that's interesting about these markets that people don't appreciate is that they're not economic markets, they're political ones. Political markets don't have any economic markets have supply demand reasons. Political markets have basically power reasons. When you're dealing with power, nothing rational ever happens, which is why markets have such a hard time pricing political risk, because it's, the most intelligent thing for Russia right now would be to withdraw and recover, which is, of course, the exact opposite of what a political decision would be. And therefore, pain becomes much greater. And then markets are just completely incapable of pricing in non-rational decisions. So I think, that's why there's so much cloudiness going on in the space. But we've kind of macro talked long enough. Let's get funky. Let's get serious about trading. Bet 10% of your account on a trade right now. Challenge number one. First trade of the day. What are you going to do? Remember, equities are down 3%. You're going to be selling the bottom right now, Chris? Or maybe you won't. Maybe you're going to be chasing the. Maybe you think there's more to the downside. It's really going to be fascinating to me. Or you're going to do something else. I leave it to you, gentlemen. 10% of your account. Give me your first trade, please, and then give me justification for what you want to do.
So, Scott, you want to go first?
No, yeah, I was waiting for you. No, I can go first. You want me to go?
I'm still thinking, so you go first.
Okay.
You're still thinking. Okay. So, Scott, if you got an idea, go for it, my friend.
Sure. First of all, I think we should have a discussion someday about trade sizing and betting aggressively. We're taught.
Yeah, it's a trading battle. There's no trade sizing. Trade sizing is for wussies.
I mean, I think there's a fine line between betting, 0.25% of your account and maybe 10%. I think there's a place though for aggressive betting though, if you're experienced and use rationality. So I don't think this 10% is wild. I think it's a very good challenge. Can you see my chart? I'll ask again. I assume you can.
Yes, you're looking good.
I'm looking at
Euro Aussie. I see Euro Aussie.
Yeah, I'm looking at the Euro Aussie. Okay. We've got, if you look at the moving averages, which some people like, some people don't like, but it does give perspective. The fast is below the medium, which is below the longer, which is bearish. The price has been hanging out in this range in between these three, bearish. We've got some red candles, that's bearish. And we're just kind of in the middle here, right? And the Euro Aussie, I would love, now, do I have to take this trade now? I will for the trading battle. But I'd love to see a break below the low. My trade officially would be, I'd love to go below the low at 1.4673. I'd love in my 10%, because I'm risking 10%, take it down to this moving average. That would be my favorite trade.
We have Aussie labor data coming out a little bit later this week. Consumer sentiment really improved. That may be a clue to stronger labor markets. Generally, labor markets have been very strong, irrespective of inflationary pressures because of demographic pressures in OECD nations. So you might get it. It's not a bad trade even at these levels. So we're going to get you short here. And where's your stop on this position? Or there is no stop.
I'll do stop right at the top moving average. I'd love to put a stop at this moving average right up here.
What is that? What moving average is that? What number is that? Is that a?
This is the 84.
Now, can I ask you a question?
Sure.
Is there rhyme or reason for why it's 84? Is there what's the magic value of 84?
Well, I went to a psychic, and the psychic.
Okay. Okay. I hear you.
It's a fib number, so no big deal. Some traders like it because it's a Fibonacci. If you like Fibonacci, then that's why. 100 I've used a ton over the years as far as testing my automated strategy. So 100 is fine, but this is a fib number at 84.
Okay. So astrology, basically. Okay, got it.
Basic astrology and psychic. Yes.
Okay, very good, very good. Very good. I call it technical astrology. It's very
Yes.
very popular amongst our
And the
our
moon
guild.
phases. Don't forget the moon phases, Boris. That's
Okay,
my
wait
favorite.
till we get Chris talking about alien wave. My Chris, my joke about alien. What's the most popular tool for alienicians? You know what the most popular tool for alienicians is?
Go on.
The eraser.
Are you referring to Elliott waves?
Yes, I'm referring to Elliott waves.
Well, I agree with you wholeheartedly.
Yeah,
In that case.
Okay, now we gave you all the time in the world to cheat. So tell us, what do you like?
To cheat. Can I say one more thing? I had a short on the dollar yen, and it went down about 1 million pips. So I am formally protesting this entire battle. I had a short that would have won huge. So basically, I win. Go ahead,
Wait,
Chris.
hold up. But like, I haven't even looked at the yen charts because I've been super busy trading indices. Aren't we like spiked up? What happened? Like this actually, I want to ask you just before we get to Chris. I want to ask you. So you had this was a like a trend trade, or obviously you saw dollar yen weakening. You got into the trade. It was really working for you. You probably were short from 44s, right? From 144, 45s, right? Is that what you're saying?
When I set up this trade earlier this morning before we got on, there was a little tiny wick right here, and I was going to trade below the low. And you can see this line. This line was put up before we got on the air. And look at that. It went all the way down to the 50 moving average. So I would like credit for all of this, please. And I'd like it in my bank account tomorrow.
Okay, you got it. What was that? About 3 seconds before the dealers pulled it back up on you?
Yeah, it's exactly. Now it changed dramatically. Yes,
exactly. Yeah. This is like, and we'll talk about that in a little bit about automatic versus proprietary, about some of the ways that data lies to you. Sorry. So Chris, talk to us. Your 10% bet.
All right. So I'm still thinking because the market is a little bit nuts at the moment.
Of course it is.
But here's
I
the
went
thing.
long equities. I already made my money while you guys were putzing around. I bought the bottoms of the NASDAQ and I bought the bottoms in the Dow. But go ahead.
So here's the thing. I'm looking at the dollar index again. Can you guys see my charts, by the way? Yeah.
Mm-hmm.
Yeah.
Okay. So I'm looking at the dollar index again. Obviously we had this big push up. This is a 2-hour time frame now. I had this big push up. The expectation would be then that the next move would be down to test, right? And so I'm going to go ahead and bank on that. And what that means is on my dollar secondary pairs, I'm looking for buying opportunities. So, but only short-term buying opportunities, right? Very short-term buying opportunities.
Yeah, that's fine. That's
so.
Sure. In the long run, we're all dead, as John Maynard Keynes said.
I think for my first one, I'm going to go with gold. Can I put a pending order, Bars, or does it need to be?
No pending orders. The pending orders is it's for amateurs. No, market, baby. Get in there. You like it now. You like it 2 hours from now. There's no crime in baseball. You know how it goes.
All right, fine. You said it. All right, then 10% on gold. Here it comes.
Wow, that is a big balls to the wall move here. Props to you. Okay, so this is interesting. Can we talk a little bit about this gold trade? Can you pull in? Because first of all, I love how what I love about Chris's charts, by the way, is like he does these beautiful annotated textual stuff. I don't even know how to write text on these charts, but like he does these beautiful visual narratives. And so what's interesting about gold, this is what, a 15-minute chart. Can you pull out like just maybe to a daily, just because I just want to show everybody what I've been seeing on gold. I did my monthly kind of analysis. This is the key thing. This is the oh, hey, can I ask you a question? So when you went, like, you just went from 15 to a day. This is just a trading view question because I'm curious. Mm-hmm. How did your annotation like stay in place? Was that because you had annotation on the daily charts that was different from the 15-minute chart, and that was
so the way I do it, you see I have a 4-screen setup here where I have weekly, daily, 2-hour, and 15.
So you annotated a different time chart differently, and then you go to that time chart. Nice.
You got it.
Right?
Yeah. So I actually teach a top-down analysis. So the way I approach the markets is I always start on the weekly time frame, and then that guides sort of my starting point for the next smaller time frame, right? So, starting here, I then go down to the daily, then onto the 2 hour, and then finally onto the 15. Where I'm looking for
my question was much more rudimentary. It was like, how did you get the pretty annotations on each chart? And that was because you had 4 different charts. Okay.
Yes.
Cool. So if we go back, can you just go back to the daily? Because that's a very, I think, informative chart. So look at that. It's a triple test at the bottom, and in the 1650s, 1640s, right?
Mm-hmm.
This is going to be, I think, where the rubber hits the road. Yes, we're coming down. You're buying this. Where would you hold this? Is your stop like underneath the daily lows? Would that be the intelligent stop for you?
Yeah, I mean it just happens to be, but that's not like what I was specifically going for, because I'm looking at the 15-minute time frame. So I'm just going based on the low right here.
Which is you just have a very, very tight stop.
Yes.
Can I ask you a question? Why? Okay, so I have a question. Why would you do that? Like the 15-minute stop, it's a 50-50 chance it's going to get taken out by noise. Like they're going to probe it. It's really, really like when, if you were trading for real, wouldn't it be more intelligent to really give yourself that $40-$50 budget on gold? Because, we're clearly near lows. The funda may be swinging your way. The technicals look very, very constructive. Or is your approach, okay, if I get stopped out and it re-rallies, I'll go back in? Like I'm not gonna let myself bleed out for 40-50 points. Is that
correct?
Your approach?
Yeah. So I do not like to hold upside down position.
I don't like to be hold to be proven right?
I'd much rather, look, I'd rather take a small loss and, like you say, reset and sort of reload and get back in than sit there all day long and hold an upside down position all day long. You know what I mean?
Interesting. That's interesting. How about you, Scott? How do you feel about that?
Well, I think I agree with Chris. I don't mind having ideas, and I don't mind taking chances. And if the chart tells me something, even if I don't truly believe it in my heart, or if I have conflicting ideas, I agree. I would try an idea and then take a quick stop out. And honestly, I wouldn't care about getting back in. I know some people get crazy about it. Well, the idea didn't work. I'm not going to do that again. What am I, an idiot? But no, I agree. I would take a small chance and stop out, and that's fine with me. Okay, we'll do it again. News is crazy. I'll try it again.
That's interesting, because I'm a sort of on the opposite end of that personally, and I think it's very much a personal preference. I don't like to get cut for, I don't like to bleed out from 1,000 cuts, which is like, I don't like to do 10,000 probative trades against, like, something can hit support resistance 10 times, stop you out 10 times, and then eventually go, 5x your way, but you've already lost 10x in just range trading. So I'd rather do smaller size and let it, if I'm like, this is not me scalping. Scalping is a completely different approach. I'm in and out, and there is no argument. But if I'm positionally trading, I really want to give it some breathing room. I don't want to be tight at all, because then it's just an invitation to be range out stopped. So I guess yeah.
So I agree with that, Boris. I mean, I believe in giving the market room as well, but the difference is that, like Scott said, I'm willing to put X amount on this idea that I have. If I happen to be wrong on the idea, then hey, I was wrong on the idea. I took a small loss. Okay. With regard to the death by 1,000 cuts, I think the answer to that is you just have to focus on the quality of the position versus the quantity, right? As long as
can you explain that a little bit more? What do you mean by quality of the position versus the quantity?
So when I say quality of the position, I mean, can you justify that position? And if so, what are all your reasons for justifying it? I'm a purely technical guy. Like, I believe the fundamentals exist to just kind of push the market along to their technical conclusions sooner. But that the market is driven by its technicals. And so
So
the quality of the trade means that you should have a checklist, right? You should have a list of things, a list of boxes that need to be ticked before you're ready to get into a position. And the more boxes they tick, the higher the quality of the trade.
Okay. You know what? So this is going to lead us into our second challenge, but I really want to have this conversation because we have this conversation all the time, and I think it gets short shift. Scott and Chris, let's define what you mean by technicals. I think, it means a million different things to a million different people. What does the word technicals mean to you, Scott Welsh?
Well, again, I've been an automated trader since 2012. So what it means to me is 1, 2, 3 qualifications have to be met. So you do a little bit of testing. You have an idea of what might work. For example, I want to follow the trend. Okay, well, how am I going to get into the trend? Well, it's got to break above this, and the momentum has to be that, or this indicator has to read overbought or oversold before I get in. And to me, that's it. It's 1, 2, 3, but it's all on the chart. It's not what news came out or what the company is going to do 6 months from now or any of that. It's checklist, like Chris said, 1, 2, 3. To me, that can be price. It can be anything. It doesn't have to be indicators per se.
Okay, so let's dive into that. It could be price or indicators. So amongst your technical array of tools that you rely on, can you give us the top 3 things that you use? I mean, price action by itself, standard indicators, maybe patterns. What do you use as your toolbox of technical analysis?
My favorite thing, and to me the most eternal, the one with the most research I've seen with my own eyes, is just a flat breakout. It breaks above the high of something. Yesterday, a week ago, 40 bars ago, 150 bars ago. That is my number one. Breakouts work. They've always worked. And again, we'd have to define what work means, of course. But breakouts produce profitable trades, and they have for hundreds of years, even going back to the tulip mania, even back in the 1600s. So that's my favorite. But I'd love to add an indicator onto that. For example, an ADX. This breakout is stronger than that breakout. Well, how do we quantify that? Well, ADX is another one. But as far as using straight indicators, I love Bollinger Bands. You can trade long term, again, big targets, big stops. You can trade Bollinger Band breaks. It is gone extreme. It breaks above the Bollinger Band, go long, not mean reversion. But that's another way to get in. Breakout's probably number one, but an indicator, RSI, Bollinger Band, stochastics. Probably Bollinger Band is my favorite of those 3 by a small margin, but those are my favorite.
Can I ask you, while I ask Chris the same question, can I ask you to set up your charts and show us a Bollinger Band breakout? I'd love to see what you mean in terms of using Bollinger Bands as a breakout indicator. Now, Chris, tell me what do you mean by technicals? What does technicals mean to you as a word, basically?
It means all the pretty drawings that you love so much on my charts, Boris. That's what it means.
Okay.
No,
So,
I mean, I'm a big Fibonacci guy.
You're a big Fib guy.
Kind of drive.
That's your bread and butter.
Yeah,
that's your bread and butter.
Yeah,
okay.
that's the basis
within the Fib structure process. What is your general analytical framework that you work with in the Fibonacci space?
What do you mean?
Like, clearly you have a setup process that utilizes Fibonacci's, and I would imagine it's probably a very repetitive process. So what needs to happen from a Fibonacci perspective in order for you to engage with the market? I guess I'm asking sort of like, what is your bread and butter Fibonacci setup? I was trying to be highfalutin, but clearly went over your head there, my friend.
Speak in plain English, Boris, please.
Yes, exactly. I was putting on my McKinsey hat the best I could, and clearly that just did not. That failed miserably. Okay.
Yeah, look. So the market moves in waves, right? Never in straight lines, always in waves, and the wave is comprised of 3 phases, right? You have your impulse, you have your correction, and then you have your continuation. The Fibonacci's come into play just to measure the wave, right? So what you're essentially measuring is that impulse.
Mm-hmm.
Distance that the market pulls back in relation to that impulse will help to determine where to likely extend in terms of the continuation, right?
Interesting. So
There are two main points that I'm looking for.
Right.
If I find a formation, let's take a bullish setup for example.
Right.
If I find a formation at what I perceive to be the end of that correction, then I'll go ahead and buy it, and I'll ride the wave all the way to the de-extension, which would be the end of the correction.
Got it. Now, what I was going to say is sort of within that methodology, if you have an impulse and you have a very shallow retracement, let's say, 38, 23, let's say it's even 23%, right?
I love those.
And it doesn't go more than that. Wouldn't that be indicative, at least from my experience, the shallower the retrace, the stronger the continuation. The third wave is good, right? Because they're just not letting it go down. So, 100%. So within that structure, would you get, let's say it goes to fresh highs within that wave structure? You want to be a buyer in that thing, or fresh lows, right? You want to be a buyer because it's a momentum continuation trade for you.
Yeah, absolutely. Okay,
sounds good. Yeah, sounds good. Yeah, that's a very classic price action technique. I mean, I see this on 1 minute charts all the time. So Scott, show us the Bollingers. How do you use Bollingers for?
And these actually have worked. If you're going to compare pure breakouts to Bollinger Bands in 2022, at least in my testing, the indicator has done better. The bands have done better, for example. So this is a very rudimentary example, but it's funny if you keep it really simple and use longer term charts like a daily or even a 4 hour in Forex. It's surprising how much profit you can make. All right, Bollinger Bands are on the chart. This is standard. It's 20. Okay, just a 20 comes straight out of the box. 20. It's on the daily chart. Here's a daily close above the bands, right? So it closes above. That'd be your entry. Now you would have in many strategies. I have just a straight profit target. That's it. I want 200, 300, 400 pips, whatever.
Right.
And there it goes. Right. Once you got the break, you got to move. You could get out when the momentum changes.
Right.
Or
so you're walking the band. You like to walk the band. Like to you,
I would love that. Or even if it stays outside, and if it comes significant, I mean, if you're discretionary, this would be an indicator to get out. But if I had a big profit target, I might not hit it till here, and I might not get out till here. Yeah. And here's the opposite example. I mean, here's a close below, and then it walks on, and then you would get out. So very simple.
No, it's interesting. I mean, the sort of the plain vanilla simple analysis of this is that if price walks the band without touching the 20 period SMA, you're in for a hell of a ride in that direction. You see it both to the short side here at the beginning of 21, and then very much to the long side when it starts the long cycle. As long as it doesn't touch the 28 at the midpoint, you can ride that thing for quite a long time.
Yep, exactly.
It's very, very interesting. It'd be interesting, like if you actually superimposed the Bollinger Bands onto fibs, you probably, first of all, you get the breakout signal on Bollinger Bands, but then you could project extensions using fibs. So I could, if I could just combine both Chris and Scott, or all those of you watching, you could just create, the Frankenstein monster of all trading strategies by using both of their ideas. So this brings us, speaking of Frankenstein monsters, we got challenge number 2, which is technicals versus fundamentals. Place a trade using one. Using one is I want to force you guys to trade fundamentally just to take you out of your comfort zone. But look at the faces on both of their eyes. No.
I'll trade fundamentally, but can I look at my charts first?
Yeah, sure. That's actually. And by the way, I'm actually curious. Do you? I mean, you clearly are, and Scott too. Everybody reads the news. None of us are like living in this technical vacuum, right? So you're clearly aware of the fundamental factors that impact. So Absolutely. Do you absorb that into your analytical framework? Do you, especially on the longer term charts, or no? Like when you're making decisions, does fundamentals take any piece of your mindset or mind frame, Chris?
No.
Okay.
I cover them. I talk about them, among my students, and I'll discuss them in my trading sessions, and
Right.
sort of incorporate it into the overall picture. But I won't base my trading decisions off of them. No, it's pure technical for me.
All right. But so given right now, obviously you're gonna give us a technical trade. What what would be the narrative story around what you like to trade? Or give us a trade, and we'll see if there's a narrative story. Sometimes maybe there isn't.
Okay, so I took a trade on cable. Let me go ahead and show you that. And I'm basically following the same exact premise. It follows the same exact premise as the gold trade, in that I'm anticipating we had the big sell-off. It's only natural that the market then pulls back to test that sell-off. And in this case in particular, if you look, we have this innermost trend line right here. We then have this secondary trend line. That trend line's now been broken. So the expectation, and now that, let me go back. Now that we are below, I'm going to consider this resistance. So the expectation would be a move back up, at least to test resistance.
What is that blue line? Like, where is that coming from?
This one here?
Yeah. The one where you think is going to be the 1650 resistance. What is that a result of? Like, what is it?
So it's starting
it's from way back there.
Yep, and then it just follows all of the lows. My rule of thumb for my trend lines is that you have to connect all of the major lows that come before the highest high of trend. So if this is the highest high of the trend, then all of my major lows have to be connected by those trend lines. Otherwise, they're not serving their purpose.
Interesting. Okay. All right. What about so bottom line is you're going to be long cable up to that 1650 level?
Yeah, so I'll go ahead and pop the trade on for you now, the parameters. My exact entry was 115.62.
Okay.
So 628 to be exact. I've got a stop at 115.20. And then I'm going to look to take this probably up to about 16.20. And I'm happy with that. I'm good with profit at around 16.20. So I'm going to go ahead and throw a take profit level at 1.1620 on this.
Okay, got it.
Targeting about 57 pips on that trade.
Okay. What about you, Scott? How are you going to structure your trades? I mean, obviously, I know you're technical, but do you ever think about fundamentals?
Yeah, absolutely. I study fundamentals. I'm fascinated by them. For Forex, you want to very much listen to economic announcements. For stocks, especially if you're a long-term trader, it definitely matters. You definitely want news on a company. You don't want your company to go to zero. So yeah, I definitely pay attention, but I can't recall ever taking a trade based on fundamentals, at least not in recent memory. It's been a while, maybe since 2004, I think I took a stock trade, but anyway, mostly technical now. So if I were to set up a technical trade, just to be interesting, I'll take the opposite way of Chris. And here's why. So can you see my chart again? I'm on the
I see cable. Yeah, we're seeing cable.
Yep. All right. The cable, pound, dollar. Here would be my thesis. Moving average is down, so the trend is down. All right. We see a lot of red bars. It's come back, but what has happened? It retested the midline, came up and retested the midline again. Now, while the bar is green and we're a little bit of an uptrend, the overall trend since August is down. So I would take a short trade at this level, which is, I can't see it, whatever, 1.11566. And I would love to see it get down to this low. I'd love to see it even get down to the lower band, but I'd take it down to this low, which is, what is that? 1416. So I'll take a short trade with a stop at the band at 1695. And then I'll take it down to this low, which is 1410. How about that?
Sounds good. Hey, Scott, looking at the Bollinger, I have a question for you on all of this. Have you thought, and maybe you have you thought that, if the instrument walks the band for more than one candle, in other words, very often we have the Bollinger Bands gets tested and it bounces back up, but if it is the probability of walking the band greater when you have 2 candles on the band versus 1? Like, would that be an interesting starting filter for a strong continuation trade?
No, I like that a lot. Yeah, definitely. When it hits the band, it's a signal that we're out of the standard deviation zone, right? 67% of the price should be within the
Right.
bands. If it's outside of the bands, we're in a weird thing. We're in a weird situation. If we
Right.
do it once, so what? But if you do it twice, it just makes sense that we're in an extreme trend. So absolutely, I like that. I like that as a filter.
That's so interesting because we literally use the exact same technique on 1-minute charts using RSI, which is the same thing. We're basically we're trading when we have a double extreme. We have an enormous amount of confidence there'll be continuity. When we have a single extreme, we just let it go by because that's just market hitting. That's market just playing with price, not really feeling confirmed with price. That's interesting.
Right. No, 100% agree. I definitely agree.
All right. Sounds good. Sounds good. All right. Well, we're running a little bit tight on time. So, actually, before we go to the third, I sort of just wanted to ask you guys, because, Scott has been a very, very long, ever since I've known him, there's been a algorithmic, systematic, I am by the books, Mr. Accounting, don't tempt me with your proprietary indicating analysis, gut feel things. And yet, just before the show, he's kind of confessed to me that he is actually looking around and diversifying his approach to maybe doing some prop trading. So I just, I want to hear the confessional here. I want to know what's going on and why. Which, by the way, I just kind of want to let you know that is actually a super positive thing in my opinion, because everything in the market, the only absolute certainty in the market I know, having lived through 30 years of market, is that markets will change. No system ever works all the time. And as a matter of fact, systems can literally flip around 100%. Like there is, you could say momentum worked for 100 years and then it won't work for the next 100 years. Like nothing in the market ever is continuous with any degree. The only thing that's continuous is the fact that it's going to change. So you really have to always be open to the possibility of completely destroying your whole, value proposition in order to reinvent yourself and adapt to the conditions. So props to you, but I'm just curious, why you decided to go to explore the prop side.
Well, 2 things. One is I love trend following very much. I believe in it. I've tested it ad nauseum. But even in the best of times, trend following is up and down. Like even in monster years with huge returns, you're going to have several months where nothing happens or you've stopped out. And there's a part of me that's like, couldn't, maybe, possibly, could I be doing something in the meantime during these periods? One of my favorite movies, trading movies, is the story of Billy Beane, Moneyball. And even though it's a baseball movie, but I love that Billy Beane put together his team and then never watched the games. Like that really resonates with me as far as being an algo trader, is that watching your algo trade is awful. And if I am busy occupying my mind with a high probability strategy, whatever that means, I think I'm on the track, then I can leave my algos alone. And so this is more of a, yes, hopefully I can follow some trends and make some money with stocks and possibly options, but I would love a productive way, hopefully profitable way to just let my robots trade and not touch them or even care about them. So that's been the crux. I really want to be a better algo trader. So I've become a discretionary trader so I can leave it alone.
Interesting. Wow. That is super, super interesting as a reason. Wow. Very interesting. Good to know. What about you, Chris? Have you done any systematic trading? Have you algorithmic? Have you EA'd any of your strategies?
No. Okay. I have in the past. I have throughout, in my career at different points, but I've never. I like actually trading. I like the discretionary. I like this, to know exactly why I'm taking each position at the time I'm taking the position. I don't know. I could never. I know, obviously, algorithmic trading has its many benefits, but it just never has been my style. It's never appealed to me.
Hey, Chris, can I just, you just resonated with me. There are so many trades, I mean, recently and over the years, where the algo will take the trade and I'll be like, gosh darn it, I do not want to be in this trade. Like, it's not a one-time thing. It's like, that's a stupid trade. You're taking it at the high or that. And I hate this trade. I hate being in it. And that's the difference between discretionary too, is that you'll always at least like the reasons you're in it. That stupid robot. What are you thinking, right? So that's definitely a plus for what you do.
Absolutely. Absolutely. Yeah, I'd much rather be out of the market wishing I was in than in the market wishing I was out. That's what I always tell my students. And it sounds counter.
Wait, say it again. You'd rather be out of the market wishing that you were in than to be in a
I was
market
in
wishing
than
you
in
were
the
out.
market wishing I was out. Yeah, because if I'm in the market wishing I was out, the only reason I'd be wishing I was out is because I'm taking losses.
Right,
Whereas
right.
if I
So
was wishing I was
you'd rather
in,
you'd rather give up the opportunity than
Exactly.
than take the loss.
You got it. Yeah,
Interesting.
exactly.
Interesting. That's interesting. That's super interesting. I totally resonate with everything that you guys say. Although my journey has been a little different. I've sort of went, having done pure algorithmic forever. I realized they all suck. They at least my algorithms inevitably die. On the other hand, algorithmically trading, that is letting the algo place my trades, place my stops, place my targets, and actually enter the market at the right time, which is critical for me, has been invaluable. So I've turned all my algorithms into these assistants. They're not algorithms, they're assistants. And as assistants, they've been super great. They've been, I can't live without them. I suck at discretionary trading. I am always too early, or I'm always too late. I'm always chasing price, or I'm always anticipating price. Whereas the assistant waits for when it's supposed to go and doesn't, it couldn't care less. So that's been a huge boon for me in that respect. So guys,
a big way, if I may, Boris, just quick, a big way that one of the methods I use to sort of mitigate the effects of discretionary trading is I'll use pending orders. So I'll say, if it's kind of like algorithmic, right, where it's based off of if this happens, then do this. I mean, it's the same thing. It's exactly the same thing. I'll say, if the market does this, and say breaks this high, breaks this low, then take me in.
Yeah, a pending order is sort of like the most common algorithm there is, because that's effectively it's the foundation of it. Almost every single algorithm in many ways is just simply a more complex variation of a pending order. It's just an if-then statement based upon maybe a couple of more variables than just price, but that's what it is. Yeah, it's really interesting. All right, guys, we had a great session. We're coming up to our final challenge, which is spin the wheel. My favorite challenge, where nobody gets to choose anything, and you're forced to have to go and do your thing. So there's no scoreboard today because we're having a little bit of technical difficulties. But we're gonna obviously summarize all of these results in about a week when we tally up the numbers. But now we're going to spin the wheel, and we'll start with Scott. I don't know if you're familiar with our little spin the wheel function, but we're going to spin it. You hit press enter, and whatever comes up, you got to take that trade, either long or short. We choose the instrument, you choose the side. Now he's already traded pound dollar, so now we're going to respin. By the way, this game, I play this game all the time. I've never yet spun the wheel once. I always have to spin it twice or three times because inevitably it always goes. What's the chances? Like 1 out of 20? It hits every time. It hits the one trade that we've already done. So okay, so now you get to choose the loony, world's most inscrutable pair, in my opinion. I think if there was a Olympics of torturing forex traders, the pound and the CAD would be 1 and 2 in terms of losing more money, in terms of extracting more money out of forex traders than those two pairs. So I leave it to you. Dollar CAD. Let's take a look at the chart. Tell me what you want to do with it. Oh, we lost Scott's. We lost his volume. Oh no. Where is he? We're losing you. No volume on him. I don't know why we lost his volume. Oh, he's on mute. Yeah, there we go. There we go. Thank you. Okay.
I didn't even hit mute. What happened? The producer hated me, I think.
It was probably, yeah. It was Alexa. Always blame it on Alexa.
Dollar CAD, I'm offended by even its mention. I hate it as you guys hate it. I will. The trend looks up, but the bars look down. It's in between. It's nothing. So I'm going to follow just a very short-term momentum. I'm going to go short with a goal of the band and a stop at the top of this daily bar.
Okay. All right. It's just, it's as good. It's a 50-50 trade with dollar CAD, and regardless of what you do. So you might as well do that. That's fine.
Thanks a lot, Wheel.
Thanks a lot, Wheel. Right. Very good. Very good. Okay. And what about you, Chris? Let's spin the wheel for you. Let's see what we got here.
I'll laugh if it gives me dollar CAD.
What's that?
I'll laugh if it gives me dollar CAD.
Gold.
It gives you silver.
Oh, okay. All right. All right.
It's like I feel like Newman from Seinfeld, because silver has just been a torture for. I think it like destroyed more precious metals traders than anything I know in the last couple of months. Silver. Okay, talk to me, Chris.
So, can I do a pending order or not?
No, we got to take a trade, because otherwise, pending order may not trigger. So we need to get you into the market. What you can do is you can do a tiny little probative order, and then you can put like bigger size on pending. So this way, at least you're in the market. We mark you, and then if it hits you, then you're there. How about that?
That's a fair compromise. I'll take that.
Put a toe in. Put a toe in.
I'll take that. I'll take that.
I'm using a Guzman analysis. Put a toe in there.
Super shallow one toe, baby. All right. Let's have a look at silver.
So yeah, it's an ugly chart. I mean, it's just an ugly chart. There's nothing going on here. It's just been it's literally been one of the greatest shorts around. And the reason why it's been one of the greatest shorts around is because nobody shorted this thing. Everybody kept trying to buy the dip, because they couldn't believe that in a 10% inflationary world, silver could actually decline by 50%, which is what I mean about markets, which is what I mean about how markets change. And, markets are all about, not about value, but about perception of value. And perception of value certainly has shifted on silver here. So technically here, it does look like it's, I don't know, I'm reading it. It's your trade, but it looks a little bit like it definitely bottomed out. I mean, I'd be more of this trade, I'd be a buyer than a seller, but it's up to you.
I would agree. Thank you, Boris.
You're welcome.
I would agree with that. I would certainly agree with that. I mean, I've also got a couple of things going here. I've got a morning star going. I'm not quite in the zone I'd like to be in. I'd like to be above this automated trend line here, ideally.
Right.
Because I mean, realistically, I look at that and, there's a big risk that we're looking at the impulse down here. And I'm looking to trade against it. But given everything we've said about the dollar and everything we've been talking about with the dollar.
Yeah.
Yeah, I'm bullish on this too. So I'll tell you what I'm going to do. I'm going to buy at market because you're forcing me to, Boris. And then I'm going to buy again if it goes and breaks this high right here.
You're going to add. Wow, look at that. Look at that. Is that what you meant about a pending order? You were looking to buy the breakout? Is that what you wanted?
Yeah, I was also going to maybe look to go for the high of this previous bull candle right here. Just to kind of give that little bit of extra.
Just a short breakout. Yeah.
Yep.
Breakout. Yeah.
But yeah, I'll go in at market. That's fine.
Okay. Cool. All right, guys. Sounds good. So we had some really, really good trades on the board here today. Also, more importantly, really interesting insights. I hope everybody really enjoyed all of the trades we did here. Before I end the show, because I'm running out of time, please tell me where people can find you and the charity you guys are trading with. We'll start with Chris. What do you? Chris runs a very, very interesting educational service. So please let us know where people can find you and who you're trading for.
Yeah, absolutely. So thank you so much. I'm trading for the British Heart Foundation today, once again. And we offer not just education, but also coaching and trader funding as well. And you can find us over at www.kickstarttrading.com.
Oh, cool. Very cool. Very cool. KickStartTrading.com. Okay. And what about you, Scott?
Doing American Cancer Society today is our charity. And you can find me at scottwelshstrategies.com. There's a contact page if you want to email me. I track a bunch of algos on that site too, if you want to follow along. So should be some good information. And I do have some algos that people can purchase too. So there's plenty of fun stuff.
Definitely some great stuff. Okay, super. Well, gentlemen, it's been a pure pleasure to hang out with you guys this morning. It's certainly been a very exciting day. With CPI markets are still bleeding red. Dow, I see the Dow is down 2.5%. Where's the Nasdaq? We gotta be close to we're not even just 3. We're like 379 on the Nas, 233 on the Dow. It's a bloodbath everywhere. So it's definitely been a very, very fun time. I hope you guys really enjoyed it. And everybody who's watching us, please follow us on YouTube at thetradingbattle.com, because we'll have many more trading battles coming up. Follow us on Twitter at TTB Live, where new battles will be announced. And this particular battle, we'll tally up the scores in about a week, and we'll let you guys know how both of the gentlemen did. Gentlemen, I wish you the best of luck, the best of trading today. And, may all your trades be winners. Thank you so much. The Sports Hospital for the trading battle.
See you, boys.
Over and out. Bye-bye, guys. Thank you.
See you guys.